All right, good morning, everybody, and welcome to today's webinar. My name is Jane Stevens. I'm the training manager here at Zolo, and we're joined today by Zolo Mortgages. So I have Mahir. Good morning, Mahir. Thanks for joining me today.
Hi, Jane. Great to be here.
Thanks so much. So I'm going to admit people into the room. I will pass it off to you. And I know that you have one of your mortgage agents joining you as well today.
Yes, I do. I have Prince joining me, and I see him in the meeting. Hey, Prince, can you hear me? The people in the meeting can use their mic, right, Jane?
Absolutely. So I'm just muting everybody so that there's no interference in the background. And you guys do have the ability to turn on your mic if you do want to ask a question. So feel free. I'll monitor the chat. If you guys want to raise your hand or just let me know in the chat that you do have a question, I will interrupt and get you guys to ask whatever it is that you are wanting to inquire about. So Mahir, as I said, I will hand it over to you if we have Prince already in the meeting with us.
We do. I'm just waiting for his mic to come on.
Perfect.
Prince, let me know if you have any issues. I am available on Slack.
Great.
Oh, okay. Looks like he's joining us by phone. Can you hear me, Prince?
Yeah, I can.
Awesome. Great. Okay, guys, let's get started. So welcome, everyone. Yes, we are Zolo Mortgages. Today's topic, we're going to be doing a bit of an intro. I'm going to introduce myself. My name is Mahir. Prince is here with us. He's a team lead at Zolo Mortgages, and I'm going to be telling you a little bit about Zolo Mortgages as a company as well. We're going to be going over some news in the mortgage industry, and I think it's important for you as real estate agents to know what's going on out here, to be really aware of what the market conditions are. Oops, let me go back to that one. So overview and basics. So we're going to be covering some, let's say, mortgage 101 topics. I know a lot of the agents who are joining us today may be either new to business or new to Zolo. So we're going to be covering some basic topics. Things to make your clients aware of, regardless of your skill level as a real estate agent. I want you guys to really pay attention to what you should be, or how you should be speaking to your clients, what you should be telling them about. Then we're going to be going over, for you as real estate agents, tools you can use to maybe pre-qualify your clients, or at least speak to them about what their mortgage qualifications are. So once again, we'll do a recap on who we are as a company and a reminder on how to do referrals to Zolo Mortgages. Then we'll leave the space open for some question and answers, because I know that we always have mortgage questions that have either sort of, happened in your life and you need some answers on. So I'll get started. I'll do an intro on me. My name is Mahir. I am a former real estate GM here at Zolo. I worked for about a year as a real estate GM, and I am now the principal mortgage broker at Zolo Mortgages. I am licensed in Ontario, and my license is tied to Zolo Mortgages, and we are in the process of getting licensed in BC. BC should be happening by the end of the month. We were trying to get licensed in Alberta, but that didn't work out for various reasons. So we'll revisit that sometime this year. I think by maybe June or July, we may be licensed in Alberta. And then we're also exploring other provinces. We get a lot of business from some of the smaller maritime provinces, the prairies, not and I'll let Prince, are you there?
Yeah, I'm here. You kept on cutting in and out, so I didn't know what you were doing, what you were saying.
Am I cutting out?
You did just at the tail end there.
Oh.
And I think it's happening again. Prince, welcome.
Thank you. Thank you. Thank you.
So let us, tell us a little bit about yourself.
Oh, okay. So, I don't know where to start. So I'm also a mortgage agent. I signed up with Zolo Mortgages beginning of this year, to be exact, January 1st. That was when I joined Zolo Mortgages, and I'm excited to be with Zolo. So I have an experience dealing with underwriting commercial, both commercial and real estate loans, and I've worked as a banker, and I mean I've also worked with brokerages. So I have both. I mean, you would say experiences as working as a banker and doing mortgages, both commercial and residential, and now working with a brokerage, right? And right now I'm the team lead in Zolo, managing about 10 agents, and my main focus is to bring in more business as possible and to be aggressive, because I know that Zolo has like what it takes to have a foothold in this market or in this industry. And one of my main goals is for us to stamp our authority, because already we have the numbers, we have the people to make it work. And my goal is to make sure that we have a foothold in this mortgage space. So I'll turn it over to Zolo. I'm here to continue.
All right, well, welcome, Prince. It's nice to have you on board.
Thank you. Thank you.
Of course. Mahir, are you with us?
I believe I am. Is my
Okay.
voice really cut out?
No, it just did at the tail end there. So we just, yeah,
Okay.
we figured it out. You're back.
Oh, okay.
Okay, let me know if it cuts out again. I'll try to dial in with my phone if there are any issues.
Yeah, I find that with my experience, I find that it's better always to sometimes when you're presenting to call from your phone. It gives you a better, way of talking to people.
Okay, I'm going to start dialing the number in, but until then, I'm going to just keep going. So just a little bit about us. We are the sister company to Zolo Real Estate, or Zolo Mortgages. We work out of the same office. Everyone is currently working from home, so there's no one at the office. What can we do? We are facilitating mortgages on the A side, the alternate side, and the private side. So we have access to all types of lenders. As we mentioned previously, we're licensed in Ontario, soon to be in BC. And the biggest question we get is, how do I send you a referral? How do I have you pre-qualify a client? So we have three methods here. The email to reach us is mortgages@zolo.ca. You can refer your clients to our website, which is zolo.ca/mortgages. And this is the direct phone number to reach me. So if you do want to refer a client to the brokerage, you can reach me direct. If you wanted to, where's my controller view? If you wanted to reach Prince for any sort of referrals, because Prince is great, here's his contact info as well. Okay, let me move on now onto mortgage news. And I think this is some important stuff for us to make you guys aware of. In overall market trends, if you are in, if you're an active real estate agent at Zolo even, I think you guys will see these trends occurring before the news reports it. So smaller suburbs in Ontario are exploding in growth. And specifically, the news is reporting is that the fastest growing neighborhoods in Canada are Kitchener, Cambridge, Waterloo, and Oshawa. And Oshawa is growing at around 2.1%. And Kitchener, Cambridge, Waterloo is growing at about 2%, I believe. So if you've sort of just spoken to anyone who works these markets, you know that currently in Waterloo or in Oshawa, you're getting like 30 offers per home. It's kind of crazy. The markets there are exploding because people are looking to upsize, essentially, right? Everyone is going to be working from home going forward. It's not just something that's going to end once we're past the pandemic here. A lot of people are going to be working from home permanently, and they're going to have a lot of their family home as well. So yeah, bigger spaces are what people are looking for, and the most affordable communities in Ontario are the ones that are out here in Kitchener, Cambridge, Waterloo, or out on the east side towards Oshawa I'm sure it'll start expanding into Clarington, Bowmanville as well, if it hasn't already. So just something for you guys to be aware of in terms of what's happening in the market.
It's
And
definitely
then
something
Canadians
that
are
comes up
piling.
in training a lot.
Sorry.
People have been saying Barrie and Guelph as well, seeing 30, 40 offers on a property. So yeah, absolutely. We're
Yeah.
seeing that everywhere.
Yeah, exactly. North, east, west, anywhere in Ontario where people can get something for their price range is exploding. And then what's the reverse side of that, Jane? What are people seeing in like Toronto?
Yeah, that's a great question. I know for leases anyway in Toronto, I hear that you can definitely get a ridiculous deal right now compared to what those condos were going for 18 months ago. So yeah, definitely seeing the reverse happening in Toronto.
Yeah, exactly. So uh, that's kind of what's happening out there on the real estate side. And then on the mortgage side, I keep doing this. Let me go back. On the mortgage side, we'll go to this Financial Post article, which says that the mortgage debt is piling up. And this is something that we see on the mortgage side quite often, which is clients are maxing out their ratios on the mortgage side on a consistent basis. We're also seeing clients reach out to alternate lenders, even though their income and credit score are fine. They just need the accessibility of going higher in their ratios. So we do have great rates on the alternate side. We're getting 2.79% for an alternate side loan if your client has great credit. So just something to keep in mind when you're speaking with your client is, do they have a limit? What is their monthly limit for their payments that they're willing to look at? And they may have to reevaluate those if they're looking in competitive markets, like some of the places Jane mentioned or some of the places we discussed in these articles. But that's what's happening on the mortgage side. What does this mean to your client? So there's an increased risk of your clients overpaying for a home. And what we mean by overpaying is overpaying compared to what? And you may have the comparables on your side for recently sold properties. You may have even some homes that you've lost out on offers that obviously didn't sold much above asking. So your clients are getting frustrated and they're just saying, hey, look, we'll pay whatever it takes. We just need to be in a house. And that's a risk for your clients. We'll discuss what exactly that risk is. Increased chances of clients not placing conditions on an offer to win bidding. This is usually the case in these competitive markets. The cleanest offer wins the house. So there's an increased liability for a client if they cannot close on a home. Jane, could you speak a little bit about what kind of risk a real estate client faces if they win an offer and then they're not able to get a mortgage on that property and they can't close?
Yeah, right now, if buyers are going in well over ask and firm, really that's the only way they're going to win in multiple offer situations. Best and highest is what gets accepted. But yes, they do run the risk that they might not be able to close if they don't have the cash on hand. So that's definitely something realtors should be asking for, making sure that they do have the difference between what that property is going to appraise for, is my understanding. Right, Mahir?
Yeah, absolutely. There's that appraisal risk there. We'll go into the appraisal risk in a little bit more detail a little bit later on. But there is an increased risk for you as a buyer's agent. And there is an exception to that rule. So Jane, let's say we have buyer agents here who are looking to place an offer for their client without conditions. What would you recommend what forms or what would you recommend they do essentially?
Yeah, so there's a couple of ways to do that. So you can definitely go ahead and keep the condition in the Schedule A and then cross it out and have them initial it. But there is the Form 127 as well, where the buyer is acknowledging that they're going in without these conditions. Is that what you're referring to?
Yeah, exactly. Sorry, let me just turn on my do not disturb so we don't keep getting these email notifications. Yes, that's exactly what I was referring to. Absolutely. So as real estate agents, when your clients are placing offers without conditions, just make sure that you are using the appropriate. Okay, and there's increased risk of client not being able to cover closing costs. You need to disclose as a real estate agent to your client that beyond their down payment, they are responsible for all closing costs associated with the property and that they need to have those funds available. It's land transfer tax, lawyers' fees, appraisal costs, are all sort of costs after closing. And what we estimate that cost being is 1% or higher, roughly, essentially. Keep in mind, land transfer tax can be double in places like Toronto. I'll show you a tool you can use a little bit later on to calculate land transfer tax, but it's important for you and your clients to be absolutely clear on all the costs associated with a transaction. Okay, I'll move on to the next slide. Okay, so what should I tell my clients about their mortgage? Ask them if they've been pre-qualified. Essentially, it's a really easy question to ask when you're speaking with them for the first time. It's sort of a non-threatening question that's fairly simple to clients. If they have not, refer them to us for a 5-minute consult. You can do that by emailing into mortgages@zolo.ca. And what we recommend when you're doing a discussion with a client is don't ask them what price range they're comfortable looking at. Clients have an extremely unrealistic view of what they can afford. Clients probably don't even know what the minimum down payment requirements are. So when you're doing your screening, essentially, we'll go over which questions to ask specifically, but it's important to know exactly how much this client can afford. So use a mortgage calculator online. This is the calculator that I've been really pushing in my last couple of Zolo Mortgages meetings. It's really important for maybe you to sit down with your client and go over, look, what is the payment going to be? What are the costs going to be? What is the affordability of your mortgage? So I'll go over this a little bit, and I think now is a great time for me to sort of break down minimum down payments and sort of the mortgage payments as well. So let's say we have a property that it's a condo in Toronto, which you're selling below asking now. So we'll say $450 is the price. What is the minimum down payment for a $450,000 property? It's 5%. Okay. And what is the additional costs associated with a 5% down purchase? It's the mortgage insurance. So for any purchase below 20% down, the clients have to pay a mortgage insurance premium. And that's what this amount is. I'll let sort of Prince explain maybe in detail. Prince, who pays the mortgage premium and where is the mortgage premium added to?
Okay, so thank you. All right, so the mortgage premium technically is a premium that insurers are charging, let's say, lenders, all right, because the lenders are insuring the deal, right? But the lenders pass on this responsibility or this cost to the clients, right? So in a typical world, let's say using the same scenario, you're looking for $450,000 purchase price, and you want to put 5% down, which in this case is $22,500. So your mortgage, in this sense, would have been $450,000 minus the $22,500. That would have been your typical mortgage amount that you were looking for. But because according to the Canadian law, any purchase that you put less than 20% down, you have to get that insurance. So like I said, the lender or the bank will be passing on this responsibility to you, the cost of the insurance premium. So you have to pay take a mortgage in addition to the mortgage premium. So the mortgage premium in this case, the $17,100 will be added to the mortgage amount that you would have requested, which would have been, let's say, about 420,000 and change. So when you add that, then your total mortgage requirement from the lender is going to be 444,600. So this is the amount that you have to qualify for in terms of your income and other things taken into consideration. You have to qualify for this amount if you want to put 5% down.
Great, great. Yeah, that's absolutely a great explanation of everything. Now let's move on to another example as to minimum down payment requirements, guys. So let me hop over into this slide and maybe I can have that slide available. Yes, this is an example of a minimum down payment. So it's 5% on the first $500,000. It's 10% on the next $499,000. And it's 20% total on a $1 million plus purchase. So for example, we have an 800K purchase. Sorry, this should say purchase. The down payment example on this minimum down payment would be 5% on the first 500 and 10% on 300,000. So what that should work out to is $55,000. Let's see where that puts us. Here we are. You can see the blended down payment amount is here at 6.88%. And we have the down payment at $55,000. Okay, let me just again fix this. Anyway, it's $55,000 flat. I changed something by mistake. You can also see the mortgage insurance has gone up quite significantly. So depending on how much your client is willing to do as a minimum down payment, it really, really affects not only their qualifications, so what they can do as a mortgage amount, also their payment, right? Because the mortgage amount is what the payment is based on. So important for you to know, in this calculator, which is once again at realtor.ca/calculator, you can see you can select the city. So we're looking in the province of Ontario, but any city outside of Toronto. So let's click into Toronto here.
Sorry, Mahir, I think we've lost your volume again.
Can you hear me now?
Yeah, thanks for that.
No problem. Sorry, I don't know where I left off, but we're at double land transfer tax in Toronto. And we have this option here, which is I am a first-time home buyer. So Prince, can you speak a little bit about what a first-time home buyer is?
Okay, so the first-time home buyer is a credit that is given to you on the federal level. Because let me digress a little bit and give this example, right? So I had a client call me from another province and said, okay, hey, I'm moving to Ontario. I've already owned the property, and will I still qualify for the first-time home buyer advantage when I come to Ontario? So I investigated and found out, okay, because the home buyer, first-time home buyer incentive is given on the federal level. So if you've already taken advantage of that incentive in another province, you cannot go to another province and still claim that you are a first-time home buyer. So first-time home buyer is an incentive that is given to people that are buying home for the first time. And maybe it may be a good time to note that sometimes between a husband and a wife, right? I've had people do this before, that, okay, if a husband and wife are buying a property and one person can, let's say, shoulder the responsibility or qualify for the mortgage, they may choose to let one person go on it and take advantage of the first home buyer advantage. And the next property that they get, then the next person or the other spouse will take advantage of the first home buyer advantage, right? So these are all conversations that you can have with your clients in terms of purchases, right? But the first-time home buyer is incentive is given by the federal government to help people or to incentivize people to buy homes.
Awesome. Thanks, Prince. So yeah, that's exactly it. There is the first-time homebuyer benefit, which does help out basically first-time homebuyers anywhere in the world. You have to you can never have owned a property anywhere in the world to qualify. Part of the first-time homebuyer rebate is a rebate on a land transfer tax. So instead of paying $24,000, the clients would now pay $16,000. A huge amount of savings for closing costs in Toronto. Keep in mind, anywhere outside of Toronto, it is only provincial land transfer tax. So let's say we go to Richmond Hill, it's only provincial. Okay. So great calculator, realtor.ca/calculator is the link for this. There is a land transfer tax calculator here, which simply does land transfer tax, and affordability, which I think that would be the best one for you to use with your clients. Really simple questions. Let's say annual income of 100K, co-applicant, let's say 50K. So well-qualified clients, they have about, I don't know, $800 in credit card debt, a $200 car payment, no other loans. For property tax on a monthly basis, so you're gonna have to work backwards. Let's say it's $300 monthly. It's not a condo. Let's say that they're looking at minimum of $100. You can also use the estimate for me so that the system will do that automatically. And you just click on how much can I afford? And you get a number with the down payment, of course. So it didn't take into account what the client's down payment would be, but you can always build out your own scenario and work backwards from there with the client. What our preference would be is basically, if you have any questions about your client's qualifications, refer it to us. We have a 5-minute qualification that we do with the client where we issue a pre-approval on Zolo letterhead. And the pre-approval actually has all the information that you as a real estate agent need to see as well. So you know what? I'm going to bring up the pre-approval that Zolo does. And Prince, as I'm doing that, maybe you can talk a little bit about just what we do in our pre-approval process.
Okay, sure. Okay, so you want me to take over now?
Yes, please. Just walk us through the pre-approval process.
Okay, sure. All right. So, you know, in a case whereby a client has called and said, okay, hey, I want to know how much I can be pre-approved for a purchase that I'm looking to get, right? So, the initial conversation will be around how much do you have, how much do you earn, like income, and we will have to also look into your credit score to see if you have your credit score is within the acceptable threshold for, let's say, an A lender, right? And I will also need to know information about your current job situation and how much you're getting, right? So once I know your credit score, I know your liabilities, and I know how much you earn, right? Then I'll use the qualifying ratio to determine the maximum that you could go for in terms of your income. And one thing that is very important is also about down payment. So I'll ask you about whether or not you want to do less than 20% or more than 20%, right? Because that will help me to decide whether I have to factor in the default insurance into your total mortgage or not. So once those answers have been, I've had those answers, right? The system will tell me how much you can qualify for. So this sheet is normally, populated by the information that we put in the mortgage application system. So once I tell the system pre-approve the person, then this system, this information will be, this sheet or template will be populated with all your information. So on there, the client will see the purchase price that, the maximum purchase price that they could go for, the down payment requirement, if there's any default insurance premium, they will see it here, and the total loan amount, in this case, the total mortgage. And the total mortgage will comprise of the default insurance and the mortgage the amount to have to arrive at the total mortgage that is needed. And the mortgage term is whether the person needs, let's say, a 1-year term, a 2-year term, 3-year term, 5-year, 7 or 10-year term, and the amortization that is being amortized over. And of course, the sheet will also tell them the approximate, let's say, the approximate, payment a month or biweekly, because we can choose which payment frequency the client wants, whether they want biweekly, monthly, weekly. We can help them with that calculation. And on top of that, we also give them the contract rate, because we have a lot of lenders that we are working now with, and we are able to offer very competitive rates, right? So during the conversation, we will also have a rate conversation with them as well, just so that they know that we are very competitive when it comes to the rates. And by this time to now, we are able to beat even most of the big banks. We can beat them on the rate. So if anybody is looking for like a very low rate, Zolo Mortgage will be the first point of contact, because we can beat the banks on rates now.
Awesome. Thank you, Prince. That's to give you guys an overview of what we do on the pre-approval side. When a client comes to us, we do a very, very deep look into, as Prince mentioned, their finances, their income, and their credit report. So we do pull a credit report. We issue this pre-approval directly to the client, and the client can, of course, share it with you. If you have referred the client to us, then we keep you as the agent in the loop as to what the client qualified for. What was the max that they could purchase? What is the max that they could get a loan on? And what any other terms that may be appropriate. Now, for you as a real estate agent, why is that important? When you're presenting an offer with no conditions, it's extremely important that you sell to the listing agent that not only can your client win the offer, but that they can close on the transaction, right? That's what this certificate is proof of, that yes, the client has done their due diligence and that they're able to close on a transaction. Listing agents have been burned so many times since the peak of this market, which was in 2017, and then now we're already above where the prices were in 2017. So guys, they're going to ask you before you even place an offer, do you have a pre-approval letter for your client that you can show me? I understand you're coming in with no conditions. To me, I would rather choose the price, the lower price, let's say slightly lower price, with someone who can close rather than someone who has no prospects of closing. So this is more leverage to you and your buyers that you can use when you're in an offer to win offers. Okay. Let me hop back into my slides. Yeah, so we covered this in detail. We went over some topics. I have some rates here, and Prince, would you like to walk these the real estate agents through the rates that we currently have here that you've posted?
Okay. Yeah. So these are if you go on, let's say, other places or other websites looking, or if you have somebody that is shopping around, these rates are quite unbeatable, right? Or I wouldn't use the word quite unbeatable, but it's very competitive, right? And this is not the final rate that we can offer. We can even do better than these rates, but these rates are rates that will help us remain very profitable. But if it comes to the crunch whereby we have to maintain the business, we know the things that we can do, right? So I can say that this is not a final rate that we can offer to clients. And again, the 5-year fixed rate that you see there, normally for when you see a rate like this, so this 1.49 is for insured purchases. So insured in this case means a property that is less than $1 million and the person is going to put less than 20%. In some instances, we can still give this rate for people that put at least 35% down. So again, it's going to be conventional insurable that is less than $1 $1 million purchase, and the person is going to put about 35%. So the 5-year rates for both fixed and variable are for insured purchases and purchases that the person is going to put at least 35% down, okay, that the purchase price is less than $1 million, right? And the 3-year fixed that you see there is also for the same category of, clients, either less than 20% down or more than 35% down. Okay, so these are the rates that we have now. But like I said, this is not a final rate, right? If we have to, go down further on a very good and solid deal, we have the room to do that.
Awesome. Thanks. Yes, that helps a lot. Actually, this might be a good place to segue, but what we're going to be doing, guys, is to keep you guys in the loop. I know that you guys are really, really active on Workplace. We actually have a channel on Workplace that we have been underutilizing, which is called the Mortgage channel, the Zolo Mortgages channel. If you aren't part of this channel or this group, please join it. Both Prince and myself, for the remainder of the year, the New Year's resolution for Zolo Mortgages is to keep you guys updated on rates and market news as much as we can. So after this meeting is over, we're going to be posting some rates into the Zolo Mortgages Facebook Workplace group. And we're also going to be leaving some contact info. So Prince will be available by phone, by email, and eventually by chat here on the Workplace channel as well. I know that you guys have a lot of questions on mortgages, so feel free to post them. Prince will moderate this channel and answer all your questions regarding mortgages. Okay. Great.
And speaking of questions, we do have a question that came in here about construction mortgages and whether or not you support those.
Yeah, I'll let Prince take this one. Prince.
Okay. Funny enough, I'm working on a construction loan right now, right, for a residential place. So yes, you can always touch base with me because, like I said, I've done commercial mortgages, and I can help you in either of the aisle, whether residential or commercial. So just touch base with me. My details are on the slide, or I can share it on. I don't know who asked that question, but I can share my details with Jane, and Jane will let you have my details. So reach out to me and let's discuss it, and so that I can see the best way to help you with that. But for sure, I'll be able to help you with the construction loan. And
Awesome.
Again, I must also stress that we can now do commercial mortgages. So let's say you have a property that is designated as commercial, and the client is looking for a mortgage. You can also reach out to us as well.
That's great. Very exciting. Thank you. So yeah, if you guys have questions, please ask them, and I'll make sure that they get answered for you.
Okay,
Sorry.
we'll keep going with
Back
the
to you
slides
here.
So, Prince, you've spoken about this, but maybe it's a good idea to recap now that we have this slide in front of us. Just talk a little bit about, does everyone qualify for a mortgage on the A side, and what are the categories that you look at when you're qualifying a client?
Okay, sure. So the A side, or let me answer the question, of course. Does everyone qualify? The answer is no. All right. So there are certain parameters that are certain requirements that a person or a client should fulfill in order to qualify for, let's say, an A side mortgage. And it's not even everybody that can qualify for even a B side mortgage. So there are some people that do not fit in either of the boxes, either O or B. So in those cases, the last resort will probably be a private lender, right? But we tend to want to stick to the first two boxes, the A or the B, right? And we have lenders that are very competitive in both areas. So for the A side, the qualifying criteria now, okay, I know that back in I think September, CMHC wanted to push the qualifying rates down, right? But the other insurers didn't, join in making those change. So now the qualifying ratios, right, stands at 39% for the GDS. GDS essentially means gross debt service. And gross debt service here is calculated in this way. So your mortgage payment, that is the principal and interest, all right, plus your property taxes divided by your annual income. Okay, then you come up with the 39 with the GDS, which is gross debt service, right? So for TDS, which is total debt service. So there are two ratios in this case that we are looking at: GDS, which is gross debt service, and TDS, which is total debt service. So for GDS, you need at least 39%, all right, and for TDS, you need 44%. And the TDS is calculated, that is on top of all the elements in the things that you use you use to calculate the TDS, GDS, which is your principal payment, your interest payment, and your property taxes. So you add your car payments, line of credit payments, all of that combined together, divided by your annual salary or your annual income. That is how you arrive at the TDS, right? So these ratios, I would say, are set in stone on the A side, so you cannot go over it. You cannot even do 39.5, and you cannot do, let's say, 44.5, right? There are certain instances, like say if you put more than 20%, the chartered banks may look at you favorably and say, okay, you are a little over, so we will consider. But you cannot be over by, let's say, 1 or 2 percentage points for them to even look at your file, right? But when it comes to insured purchases, in this case, less than 20% individuals, the 3944 is set in stone, and you cannot go over it. And now the minimum credit score is around 600, right? But 600 is a bit of an exception. So I would say 640 is a good score that you will get a very good rate at, right? So qualifying ratios vary based on lower credit score and income type, right? So it's very important that as a realtor, I know it's not your job to educate your clients on how to qualify, but it's a good tool and it's a good knowledge to have to help you to have a better conversation with your clients, right? So if a client does not qualify, do we have alternative lenders that can help them? Yes, we do. So if a client does not qualify on the traditional ratios, we have other lenders that we can always tap into, lenders that will look at your, but again, in alternative lending, you have to put at least 20% down. So if a client says, okay, hey, my credit score is not the greatest and I have a lot of debt, right? Then if they are looking at alternative lending, then they have to put at least 20% down on the purchase that they want to do. So in alternate lending situation, we can't do anything less than 20%. Okay, so I will pass it on to me here again to continue.
Awesome, thank you, Prince. Let's keep going here. Actually, Jane, did you want to go over the questions?
No, we just had some comments here saying great info, so thanks for that. No questions specifically.
Okay, all right, let's keep going.
Oh, actually, sorry, that's not true. I did skip one that came in also from Mansoor. So what are the rates for B lenders and private lenders?
So Prince, do you want to take this one? I know that we recently did a private mortgage that you can use as an example.
Yeah, so the B side normally is slightly higher. So let's say 2.5, 2.7, that is a B starting, that is the starting point for Bs, right? But for a private lender, it depends on the private lender, but we just did one recently and we had it at 5.99 and they charge a lender fee of 2%, right? So in conversations with clients that are doing B or let's say private lending, we as a broker don't get paid a finder's fee from the institution or from the private lender. So we have to charge a fee on top of the fees that the lender will charge. And the reason why these lenders charge, let's say, a lender fee for private lending and for the B lending is that all these deals are handwritten, and they have to review the file thoroughly to be able to assign a credit, qualification to it to be able to determine which rate they will offer. So all of this are extra work for them. That is why they charge a lender fee. And that is why we also charge a broker fee, because we in the B and the private lending side, they don't give us any finder's fee, so we have to charge a fee. So it's the fees that sometimes is a bit of a hammer to the client, because they have to pay certain things out of pocket. So, but we have special arrangements with our lenders, like on the private lending side or on the B side, that we can always arrange to have, if you don't have the money or the client does not have the money to pay these fees out of pocket, we can come to an arrangement to have it paid somewhat. But the client will pay it, but it will not be out of pocket. Maybe they don't have to give us the physical cash, but we'll have a way of handling the transaction so that it will not become too overbearing for the client.
Awesome. Just make sure I am unmuted. I am unmuted. Okay, great. Yes, and to emphasize, guys, refer. Let us get you a pre-approval letter. Let us give you something in writing that you can use as leverage when you're speaking to a listing agent. And that's going to be one of the best tools, I think, for you guys as real estate agents. So this was the minimum down payment slide. We went over that. I think that Prince thoroughly explained mortgage insurance and when it applies to a mortgage. Part of the closing costs that your clients may be responsible for if they have mortgage insurance is the PST, the provincial sales tax on mortgage insurance. So I think it's 8%. What is PST in Ontario right now? 7%, something like that. But that cost is going to be for your client. As Prince mentioned here, and as the question segued into, what if my client doesn't qualify? So lots of people don't qualify on the AAA side. The solution is not fraud. Guys, I want to emphasize this because I openly get asked questions by real estate agents. Do you guys make documents? My client doesn't have a job. Can you get them a job letter? No, that's not why we're here. We're not here to facilitate deals through fraud. That's not Zolo Mortgages MO at all. And it is a 0% tolerance here for the brokerage. I will wash my hands clean of any deal, regardless of what status it is at, if I find out that there was fraud involved. It's just how we're operating. Zero tolerance. As Prince mentioned, we do have alternate lending, which we're seeing a lot more of. And as he mentioned, the rates are, they're higher. May not start with a 1, but 2.5 even 2 years ago, like in 2018 or 2019, was what the A side was at. The alternate lending side has absolutely exploded in terms of products and in terms of rates. So yeah, that's there. Flexibility in income proof and no guilt about lying. I think that maybe I'll bring Prince in here just to explain one last time. So Prince, on the private lending side, what kind of documents, or let's say, what is the lender looking at more? Is it the applicant or is it the property? And does the applicant's income matter as much on the private side of lending?
On the private side, I think their major goal is the marketability of the property, right? The property is very important, right? For them, they think that you have already assessed yourself, and you know that maybe you are in a position to be able to pay, let's say, the mortgage or the monthly payments that you are supposed to make. Because in most cases in private lending, the payments are usually interest only, right? So interest only means that you are not paying anything towards the principal. So the principal remains the same. You are just paying only the interest that is accumulating on the money that you borrowed. So when it becomes due, you pay all the principal out at the time that the term becomes due, right? But coming back to your question, right? So one of the most important thing is the property. Their focus is on the property, all right? They will check your income to see if you have the ability to pay, but the main focus is if the property is viable, and because should in case you default, they have to be able to sell the property. So their first focus is to get an appraisal done on the property to determine whether the property is worth the price that you are paying for, right? Then they will look into your
Awesome.
income
Yes.
and all that.
Yes, exactly. Perfect. That's what I was alluding to. Usually with the private side, it's more based on the property, less based on the applicant. Okay.
That makes sense.
Just to recap for you guys, Jane, I know we have a couple of questions. I want to just finish the last 2 slides here, and then we'll spend
Sure.
the last 5 minutes on questions here.
Sounds good.
Guys, just for your use, the realtor.ca/calculator tool is the best tool for you guys to use right now. There is a TREB land transfer tax tool, which you shouldn't have to use if you're using the realtor.ca one, which also tells you the mortgage insurance payment. Okay, so just use the realtor.ca one. It's not branded and it's a great way to go. I'll go back to the slide about referring to us, and Jane, we're ready for questions now.
Sounds great. Thank you. So yeah, we were just chatting a few times actually about private lenders. So the question here from Sergey is, what do you charge on top of the 2%? So what's your finder's fee that applicant might be faced with?
Prince, do you want to take that one, or should I take this one?
No, it's okay. So we usually take we charge 1%, right? And the 1% is I would say I always leave a wiggle room for negotiations, right? Because maybe depending on the client situation and the amount of money that is being borrowed, that 1% is always negotiable, right? So it's not set in stone, but we can negotiate the rate. But the rate is 1%.
Okay, perfect. Thanks for answering that. And then we have another question here from Sonia. How does the mortgage work if someone wants to invest in property, but they are outside of Canada, for example, India?
Okay. So there are some institutions, right? Not every lender provides mortgages for people that are non-resident. So a typical example of a company that provides this kind of mortgage is Scotiabank. All right. So in somebody that is not resident in Canada, then they have to put at least 35%. But I think BMO also have a product, but that is 50%, right? So you will have to show where your down payment is coming from. You will need a letter of reference from your home country and all that. So it's possible to do that. But if you have somebody that is really interested and ready, just touch base with me and we can go through the process. But it's possible.
Great, thank you for that. And then another question here, in your experience, have you seen appraisals coming in for less than the purchase price? And how has the buyer had to deal with that? Have they had to come up with the difference?
Yeah, yes, of course. Question. So
yeah, let me just take this one.
You want to take it? Okay, yeah. Okay.
Guys, as real estate agents, this is something that I think you guys should be really aware of. The appraisal risk currently is real, especially in these smaller markets that we were discussing earlier on in the meeting. Please make sure that you are giving your client an accurate indication of really what a property is worth, and that if they're going above and beyond what the comparables of the market show, that they have wiggle room in their down payment. And specifically what we mean is we're more comfortable with a client who's putting 20% down and going above asking than a client who's putting 5% down and going above asking. And what we call this situation is a appraisal shortfall. So lenders will only lend on the amount that the appraisal comes back at. Let's say your client buys a property at 600, but the appraisal comes back at 580. What does that mean? That means that your client has to pay that shortfall. That $20,000 is coming out of your client's pocket. If your client is putting 5% down, most likely they don't have $20,000 in their pocket to close on a transaction. So it's a real risk, and it's something that we're seeing more and more of. When it comes to comparable properties, unfortunately, what lenders are doing is, or appraisers for lenders sometimes do, is they're not using the most accurate properties, and they're not using the most recent properties. It's when a lender uses a desktop appraisal software, and maybe you guys are aware of something like Purview, or on MPAC, if you've seen their closed sales. Basically, the desktop appraisal software is only using sales that are registered on the land registry system. So it's something that's gone firm and not closed is not an applicable comparable sale when it comes to a lender, right? An appraiser may be able to look at sold properties, but when it comes to desktop appraisals, it's just not a possibility. So when we have markets like we do today, and like we did in 2017, appraisal shortfalls are real. And it's something for you guys to really be afraid of. Maybe we will come back to this question in detail on the workplace channel. Maybe Prince and I can share some details there on appraisal risks. But I know we have a couple more questions, so maybe we should move on.
Yeah, so let's address the appraisal one on workplace, because I know there's a lot of information to share there. So yeah, the last question that I have here so far is amortization of 30 years. Can you do that with less than 20% down?
How many years?
30 years.
No, I just answered this question on Slack. So when you're making a purchase and you're going to be putting less than 20% down, right? And again, if it's an insured purchase, right, you cannot do more than 25%. I read an article that there's been a new there's now a new CMHC boss, right? So there is a conversation going on that they may, all right, potentially increase the number of years this year. But as it stands, right, the max for less than 20% is 25 years. If you want to do more than 25 years, then you have to put at least 20% down. Then you have a chance of increasing it to up to 30 years.
Okay, perfect. Thanks for answering that. Great. So I don't have any more questions. So if you guys do have questions, please chime in now. We have a minute left. If that's it for questions, thank you so much, guys, for joining me today. Mahir and Prince, it was nice virtually meeting you. And thank you for sharing all of your knowledge.
Thank you.
Thank you.
Awesome. All right. I think somebody's got their mic on. Not sure if you guys are wanting to ask a question, but if not, one final comment coming in. What about age? Age of the property? I'm not sure what that question is regarding.
Age of a property could affect the appraisal or evaluation. Age of applicant? Prince, do you want to comment on age of applicant, if that affects anything at all?
Yes, it does. Of course, you cannot do a property in the name of a minor, right? So because the person has to sign some documents at the lawyer's office, and the person should be, I think the age for, I have to look into it. I will check, but for sure, older than 60 is okay. All right, because in Canada, according to the laws, we cannot discriminate against offering a property to or mortgage to somebody that is on pension or on like, say, the person is age, right? So in this case, the age limit should be, let's say, above 21, or maybe, like I said, I don't know the limit, but the person should not be a minor, right? But in terms of how many years, the upper limit, so long as the person is able to read and write and understand what the person is signing, so the person should be in the right mind, right? So a person that is even 100 years and can still is active, is able to read and write, and is able to understand the terms and conditions of a mortgage, can still sign a mortgage application or can still get a mortgage from a bank.
Perfect.
Great. Okay. So
Thanks
I think
so
we're
much.
just over time.
Yeah, sorry, Mihir, did you want to add anything to that?
No, actually, I think that's perfect. Prince covered all the details that are required for that question.
Excellent. Thank you so much again for joining me. Thank you everybody who attended, and we'll end it there. So we'll see you on the next webinar. Thanks so much, guys. Have a great
Thank you.
day.
Take care.
Okay,
Bye.
bye.